This is Richard Dennis, and he's hiding a secret that most traders don't want you to know about. At just 22 years old, this guy borrowed $1,600. 9 years later, that $1,600 turned into $150 million. Wait, what? $150 million in 9 years? Here's the crazy part. He didn't have some special degree, he didn't come from money, and he even proved that anyone could learn to do what he did. His friend William said that trading can't be taught, it's just talent. But Dennis disagreed, so he ran an experiment that changed trading forever. And today, I'm going to show you exactly how he did it. So in the early 1980s, Richard Dennis was already killing it in the trading world. He was making millions trading commodities, but his partner, William, kept telling him that successful traders are just born with it. You either have the talent or you don't. Dennis looked at him and said, "Nah, I can teach anybody to trade." So what did he do? He placed an ad in the Wall Street Journal. Just a simple ad looking for people to train. Thousands of people applied, but Dennis only picked 23 people. And here's the thing. These weren't people already working on Wall Street. They were regular folks, clerks, musicians, chess players, people with zero trading experience. He called them the turtle traders. Why turtles? Because he wanted them to grow slowly and steady, just like turtles. He gave each one of them $5,000 of his own money to start trading with. Then he locked them in a room for 2 weeks and taught them his system. 5 years later, guess what happened? His turtles made $175 million combined. Regular people who'd never traded before became millionaires using his simple system. Some of them, like Jerry Parker, even went on to run their own hedge funds. So how'd he do it? What was his secret strategy that turned beginners into millionaire traders? That's what we're about to dive into today. And trust me, it's way simpler than you think. Before we get into the actual strategy, you need to understand the mindset that Dennis taught his students. Because here's the truth. Most traders fail. Not because they don't have a strategy, but because they can't control their emotions. Dennis gave his turtles 4 golden rules. Rule number 1, risk a fixed percentage per trade. Dennis told his students never to risk more than 2% of their account on any given trade. That's it, 2%. This way, even if you lose 10 trades in a row, you're still in the game. Rule number 2, cut your losses quickly. Most people hold on to losing trades hoping they'll come back. Big mistake. Dennis taught his turtles to get out fast when things went wrong. Rule number 3, let your profits run. Here's where things get a little bit interesting. While most traders take profits too early, Dennis wanted his students to ride winning trades for weeks, sometimes even months. Rule number 4, trade trends, not predictions. Stop trying to predict where the market is going. Just follow what it's already doing. Now here's the part that blows my mind. Dennis expected to lose on most of his trades. Yeah, you heard that right. He knew before he went in that he'd be wrong more often than he was right. But when he caught a big trend, when one of those trades went right, it would make so much money that it covered all the losses and then some. Think about it like this. Imagine you lose 9 trades in a row. Each loss is just 1% of your account. That's 9% total loss. But that one winning trade makes 25%. You just made 16% overall profit. Even though you were wrong 9 times, that's the power of this system. Alright, now let's get into the actual strategy that Dennis used. This is where things get technical, but I'm going to break it down for you super simple.
Dennis, by basing himself on price action or direct market movements, had to pay close attention to previous structural highs and lows zones to make all his entries. So we go to the indicators section and look for highest high, lowest low. That is, the highest high and lowest low that represent with this indicator those structural high and low zones that we must consider to form our strategy. First of all, we go to the configuration section and set everything to 20, which is one of the things Dennis always did. He studied periods in 20. In the style section, we'll remove the moving average, click OK, and that's it, since we're only going to need those high and low zones. This indicator is very simple to see and use. Basically, it continuously shows us those highs and lows, the structures that form within those price movements. For example, here we see how we have these highs. We see this interaction of the candles with this upper zone. We're in a 1-hour time frame, so quite a bit of time passes here with price in this range. Then it falls to this zone where we see that new low is marked. What happens here? That low breaks and another low forms in this structure. Until when? Until it breaks again down here and so on successively. Well, Dennis also used what's called the average true range, or ATR, a very simple and well-known indicator. We search for ATR and it appears here, even the one that comes with TradingView. We click and something like this will appear. We go to the configuration section and change the length from 14 to 20 as well. In smoothing, we'll place SMA, click OK. If we go to the 3 dots of the ATR, this option to add another indicator or strategy to the ATR itself will appear. We click and the indicators window comes up again. Several will appear down here, for example the exponential and such, but we'll use this simple one. We'll click it and as you can see, it adds an average that will be controlling the ATR data. We also set it to 20, and here in source we leave it on ATR so it's giving us the data from that ATR. In the style section, you can change the colors to your liking. I'm going to leave it like this in white, and I place 20 here as well. So this would be the ATR and here the moving average. There it is, 2020. Dennis's basic strategy was based on this. We detect these previous highs, and having this indicator, we only need to place another simple moving average, but in this case for the upper part, we edit it and place the length at 200. In this case, I'll put it in yellow, a bit thicker. I'll remove this from here, and now we have our 200 period average that will indicate with a broader perspective what trend we should follow. In this case, of course, price is above that average, so we should look for bullish breakouts to enter and have price continue upward while we take those profits. What Dennis said is that we should first detect a structural breakout following the current trend, that is uptrend. So we have this previous high zone, this candle that breaks it upward, and then when this candle closes, from exactly that closing point of that candle, we would have to place the stop loss. We visualize how many points the ATR average would mark us here on the right, multiply it by 2. In this case, this value times 2 would be this value. And from the close of that candle that broke the previous highs, which would be this value, we would subtract those values. That's where we should place our stop loss. Clearly, in this case, the stop loss was hit by price, losing the trade. But that's the basis of Dennis's strategy. As I explained before, a bit further ahead, we see again this candle here that breaks those previous highs again. Uptrend. We check the ATR, which is more or less around these points. Times 2 would be this value. At the candle close, it's around this. So again, our stop loss would be around this value. Again, we fail the trade. Right here, this candle breaks these previous highs again. In this case, the ATR is around this, which would be about these points. This candle, for example, is around this value. So again, it would be here the stop loss, more or less around here. In this case, what happens? As you can see, price doesn't close our stop loss, because in this case, this breakout has been legitimate, and now we only have to see where we have to take profits. Dennis tells us we should let our trade run until exactly this happens here. These lows right at the low of this candle have been broken. The next candle breaks it, so at that exact point, we would have taken profits. What's the conclusion of having traded this way? Simply looking at price action in this automatic way without considering any other data. We lost here this percent, here another time, which in total would make this percent, while here we gained this percent. We gained a total of this percent profit following this unorthodox strategy that so many other traders criticized Dennis for, but with which both he and his students became millionaires.
So what can we learn from Dennis's story? First, trading can be taught. You don't need some genius special instincts. You just need a solid system and the discipline to follow it. So subscribe to this channel. Second, risk management is everything. You can have the worst entry system in the world, but if you manage your risk properly, you'd still make money. Third, you have to think in terms of probabilities. You're not trying to be right every time. You're trying to make more when you're right and you lose when you're wrong. Fourth, trends are where the money is. Don't try to predict tops and bottoms. Just follow the trend and let it do the heavy lifting. And finally, discipline beats talent every single time. The turtles weren't special. They just followed the rules. Dennis proved that with the right training and the right mindset, anyone can become a successful trader. Bonus tip, hit subscribe and like this video. Richard Dennis took 23 ordinary people and turned them into millionaire traders in just 5 years. He did it by teaching them a simple breakout system based on solid risk management and emotional discipline. The strategy isn't complicated. It's not some secret algorithm or insider knowledge. It's just a set of rules that anyone can follow. The question is, can you actually follow them? Because that's what separates the winners from everyone else. Not intelligence, not luck, just pure discipline. So if you found this video helpful, drop a like and let me know in the comments. And if you want more content like this, breaking down legendary trading strategies, hit that subscribe button. Thanks for watching, and I'll see you in the next one.